Ladies and gentlemen, good day and welcome to the Medicure Limited 3Q FY23 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rohan from ICICI Securities. Thank you, and over to you, sir.
Thank you, Seema. So, good afternoon, everyone. On behalf of ICICI Securities, I welcome you all to the third quarter and 9 months FY23 earnings conference call of Medicure Limited. Today, we have the senior management of the company with us, represented by Mr. Himanshu Baid, Managing Director, Mr. Naresh Vijayvargiya, CFO, and Mr. Avinash Chandra, Company Secretary. To Mr. opening remark. Over to you, sir.
Thanks, Rohan. Thank you, everybody, for joining this call. Really appreciate your time today. I'll take you through the Q3 earnings for this quarter. So, if you look at the numbers, revenue on standalone basis stood at 271 crores, and the consolidated revenue was around 285 crores. So if you look at a quarter-to-quarter performance, quarter 3 to quarter 3 performance, then we have a growth of around 23%. Similarly, the margin improvement is also there in terms of EBITDA from 50.85 crores to 66.27 crores on standalone basis, and on consolidated basis from 51 crores to 69 crores. And PAT has increased from 34.21 crores to 47.54 crores on standalone basis. And on consolidated basis, 34.51 crores to 50 crores. So first time the company has reached a PAT margin of 50 crores in a quarter. And I think that's a good healthy trend which we are seeing now. And if you look at the performance of different sectors, so exports and domestic. So exports of previous year to quarter 3 of this year has grown from 146 crores to 180 crores. So 23% growth in exports. And domestic sales has grown from 74 crores to 92 crores, which is 24% increase. So overall blended is an increase of 23.5% over quarter 3 to quarter 3 numbers if you see from previous year to this year. If you look at the 9 months period of previous FY and the current FY, so the revenue has increased from 634 crores to 774 crores on standalone basis. And in terms of consolidated number, 665 crores to 808 crores. So there's an increase of 21.5% in 9 months revenue compared to the previous year. Similarly, EBITDA margins have grown from 155 crores to 187 crores on standalone basis, and 157 crores to 186 crores on consolidated basis. PAT margin has grown from 107 crores to 121 crores on standalone basis, and in terms of consolidated numbers, 110 crores to 120.47. So these are the numbers basically. The company continues to grow over 20% as per the guidance given in the beginning. If you remember, that's the guidance we had given. So we are well above the guidance number. And currently, if you look at quarter 4 numbers, we are on track to deliver the guidance which we had promised in the beginning of the year. So the growth will be over 20% as we close the financial year in a couple of months. And if you look at going forward, the next financial year also, we are looking at a number close to about 20% in terms of guidance for revenue, for FY24. The raw material prices have started cooling down, and we'll start seeing the impact from, let's say, January onwards, because the raw material prices came down in August, September period, and we do carry inventory of 2 months. And by the time we received this new pricing raw material, it was almost December. So we'll see some positive impact. Freight costs will also come down, and that will also make a positive impact. So we are seeing an improvement of margin of 100 to 200 pips in the coming quarters because of raw material and freight cost impacts. Europe continues to be a positive growth driver for us. Still 40% revenue comes from Europe. We have also gained some new contracts in Europe, and we see a big traction due to the current geopolitical situation, and China plus one situation what we see in Europe. We participated in two major trade shows. One was in November in Germany, Medicure exhibition, which is also one of the largest in the world. And just last week we were in Dubai for Arab Health. So in both the exhibitions we have seen a great traction being built up for polymer products from the global customers. And we have seen good demand now coming up from Middle East, from the current show, and also from the European markets. A lot of push is coming from Europe. So overall, we continue to grow there in these two geographies. In the current quarter or even 9 months, if you look at the revenue mix, is 1/3 is India and 2/3 is export, and probably this will continue even in the quarter 4 as we see the trend today. The new drugs and cosmetic bill 2022 was announced sometime in July, August, and the government has already received more than 9,000 comments from different stakeholders. And after collating these information, the bill is scheduled to be tabled in the Parliament this year. So this will be a major game changer for the medtech industry, because medical devices will be carved out from drugs and cosmetics. Because currently we are under Drugs and Cosmetic Act 1942, and with this new bill, there will be a separate chapter cast out for medical devices and a separate set of rules, and which will also help us to distinguish ourselves from drugs, and a lot of these laws which are applicable on drugs will not be applicable on medical devices. So that's a positive development for the industry. On the regulatory front, the European MDR, which was a big challenge for all medical device companies which were selling products in Europe, the new regime was to come in effective from May 2024. But recently there is a development, because many products are currently short in Europe, and due to this, European government has taken a view to extend the old MDD by another 3 to 4 years. So that's a positive development for us and also for the whole industry, that we can use our existing certifications to sell products. Nevertheless, Polymed has already applied on the new MDR for more than 70 products to be part of the new regulatory regime in Europe, and we are very confident that by the end of this year we will have our clearances under MDR. But that does not impact any business right now, because the old medical device regulation is extended by another 4 years. But this gives us an added advantage if we are registered under a new regime. This will give us an added advantage over our competition, and that is what we are looking forward to. In the recently presented Union Budget by Honorable FM, it was announced that government will be setting up institutions which can offer dedicated multidisciplinary courses for medical devices to ensure availability of skilled manpower. So medical devices has gained some traction with the government, and in NIPERs basically, which are based out of Ahmedabad, Chandigarh, Hyderabad, Guwahati, and a couple of other places, they will also offer courses on medical devices, and there is some budgetary allocation on this regard, with a special focus on innovation and R&D in medical device field, so that we can get trained people from these institutions in future, which can be absorbed by the industry. So this is a very positive development for us. In terms of US FDA, there were some testings which had to be completed, and due to COVID delays, because it's still in US, November, December, January were impacted. FDA was impacted due to COVID, cases in US. So our final testing is now getting completed, maybe in next few days, and reports will be submitted to FDA in coming week. And we expect the final approvals to come in 60 to 90 days. There is a delay. In my last call, I had mentioned that we will be able to file in end of November or early December, but there has been a delay of almost 2 months because of delay in testing by laboratories done in the US due to COVID backlog. We are expecting the US business revenues to start from Q2 of FY24, and already the products are developed. They are being tested as we speak, in clinical settings. So we are very confident that we'll be able to start revenues in Q2. But nevertheless, we continue with the 20% growth which we have already committed for FY24. For manufacturing plants, the SAZ plant will be operational in Q4. It's in the final stages of approvals. This will add capacity for export for EU markets. This plant is based in Jaipur. The Faridabad EOU plant expansion is in full swing. There's been a delay in construction due to stoppages of work in NCR due to pollution issues. But I think we'll be able to start partial operations by March 2023 and full operations by July, August 2023. So we are already on track. We are in the final stages of both the plants. Our expansion at IMT Faridabad plant is also in full swing. Again, there are some delays due to construction issues, but we will start partial operations by June 2023 and full operations by September, October 2023. So there will be 3 full large-scale plants. We are almost adding 7 lakh square feet of manufacturing space across these 3 plants. That will help us to scale up manufacturing and also add new customers as we go along in next 1 to 2 years. There's a bit slowdown in the dialysis business due to some dumping of products by Chinese players and the zero duty FTA agreements with Thailand, Malaysia, Japan. So many of these Chinese companies are misusing these FTA agreements and rerouting the products to Thailand, Malaysia, and Japan, and that is probably hurting currently our growth in dialysis. So instead of growing by 60 to 70%, which we had envisaged in the beginning of the year, will grow between 40 to 50% in this current financial year. Machine installation base continue to increase at the rate of 10 to 12 machines per month this year. But next year we see the ramp up to around 15 to 18 machines once our indigenous machine production will start. Already 2 machines are under final trial and testing. We have done almost 200 sessions on our own indigenously developed machines. And hopefully we'll be able to start commercial production in April, May for the fully indigenous developed machine, which will have 50% local content. Looking at the expansion plan, I think we have already invested. We have deployed close to 300 crores over the last 2 years since we raised the money through PLI. Almost 300 crores has been deployed for capex in FY22 and FY23. This will help the company to ramp up capacity for domestic markets, for EU and US markets, and also maybe a little bit in the Middle East. So it's an ongoing process, and some results are already visible where we can see increase in productivity. We can see a lot of money has been spent on automation and adding machines with machine learning and some AI. And also we have almost added more than 55 robots in manufacturing. So a lot of work has been done in terms of manufacturing infrastructure. And I would also invite investors who are based in NCR or coming to NCR region, please come and visit our facilities, and we'll show you around what we have done in past 3 or 4 years in terms of building the infrastructure and spending money on automation to improve quality and consistency of the products in the long-term period. So these are the updates from my side, and over to you, Rohan, again for further questions from the people who have joined the call. Thank you very much once again.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. We take the first question from the line of Rashcheti from Dolat Capital. Please go ahead with your question.
Yeah, thanks for the opportunity. Two bookkeeping question. Your other income during the quarter was pretty high. What was the reason for it? And even your interest cost, quarter on quarter, it has gone up. So if you can elaborate on both these things, why the numbers were pretty high.
Yes, other income is basically on the investments the company has. So we have close to 300 crores of investment lying in different instruments, and which are FDs and then for mutual funds. So the other income is coming from there, and also maybe share of associates, some profit from share of associates, the associate company, which the companies in our company, associate company in Egypt. And interest income, because yes, there is a use of working capital. So we have taken enhanced limits from the banks for as the company is growing, and we are almost adding 200 crores of revenue this year. So there is an increased need of working capital, and that's the reason we have taken some borrowing from the bank for working capital. But the increase is only maybe 4 or 5 crores. So it's not too much.
Okay. And sir, another thing, on infusion therapy segment, as a segment, how much has it contributed in your export business, and how much has it contributed in your domestic business? If you can, tell the contribution separately. Also, as you mentioned that, the renal therapy, this quarter was slightly muted compared to the previous quarters. Was the infusion therapy the major, growth driver for the domestic business? Because domestic this quarter has 20% growth.
Yeah, so infusion therapy, yes, it's a core business of the company. The fluid management is a core business of the company. Infusion therapy, which falls a part of the larger portfolio of fluid management. So that brings in around 90%, and we have a lot of patents in this space. So 90% of our export revenue comes from infusion therapy business. And in the domestic market, almost 70% of the revenue comes from infusion therapy. And in terms of growth, yes, I think major growth has happened. Of course, the renal business also is growing parallelly. This year we will still grow it by around 45, between 45 and 50%. But still, I would say that infusion will in future will also drive will be a major growth driver for us.
Okay. And so last question on dialysis machine. I think you have given some numbers in the earlier comments, which I have missed. Last first half, earlier you mentioned that we have installed around 140 dialysis machines, but due to the Chinese dumping, the machine installation was slow. So how many machines in all, in 9 months have been installed, and how much are we expecting in fourth quarter? And what is your target potential?
Yeah, so I did mention it initially, but sure, I will repeat that again. So till September, we installed 140 machines, and there was a plan to install another 60 machines, at the rate of 10 to 12 machines every month till March. And from next financial year, our target is to increase this run rate to 15 to 18 machines. So the anticipation is to install around 200 machines next financial year, and then we ramp it more to maybe around 350 to 400 machines in subsequent years. India market is close to around 4,000 machines right now, annual 3,000 to 4,000 machines, because average machine life is 10 years. So we hope that in next, let's say in next 2 years, we will have more than 10% market share in this business going forward.
10% market share by what time, sir?
In 2 years.
In 2 years. Okay, sir. Thank you so much, and that's it from my side.
Thank you.
Thank you. Participants are requested to use handsets while asking a question. We take the next question from the line of Mitesh Shah from Nirmal Bang Securities for the question.
Thanks for taking my questions, and congratulations for the good set of numbers. Starting with the operational parameters, I think the gross margin was strong, as we indicated. The raw materials are cooling down, but your other expenditure are high. Despite you said that the freight costs are also coming down. What is the reason majorly for this?
You see, other expenditures, a lot of expenses are there. R&D and internal transportation has increased now. So earlier till last year, people were not traveling. We have seen around in India, and in sales reps. So they are moving in the field, and they've started going to hospitals, and so again that whole process has started. Till last financial year, it was not there, because all working from home, and especially because of COVID issues. So now people are on the ground. So that is one of the key major reasons that travel costs have started increasing. A lot of international travel has started. Earlier there was no international travel, because we were all working from home. And now we are participating in all major conferences. As I said initially on the call, that we were in Germany in Medicure, in Dubai last week in Arab Health, and we have gone to all major shows, and we are also doing a lot of conferences in India. We are trying to increase the brand visibility today. So a lot of money is being spent on brand visibility today. We are in every possible major show in the country. And any conference which is there on medical, health, which is covering our product range. So we are trying to cover that. So that's all mainly for brand building and also for for corporate communications.
So that could be a one time. I think that would
It's
be.
not one time. It will be a recurring cost. It will not be a one time cost. It will be a recurring cost. Because
Right.
these costs were not there earlier in previous year because due to COVID, as no travel was there, and no conferences were happening. So now everything has started.
Actually, my question mainly because the sequential also jumped a lot. It's 9%, 8% up. So that's why.
What is up? Sorry, could you repeat that again?
Sequential other expenditure also jumped by 8%. So definitely, it sequentially won't be comparable, but it's quite high in the
No,
percentage.
are you talking about quarter to quarter to quarter 3?
Yes, yes. Quarter 2 to quarter 3.
Yeah, so quarter 3 there are major trade shows happening in quarter 3.
Got it.
Yeah, so that is also one of the reasons. But that doesn't have material impact on the results because the results we still are maintaining a 24% close to that number EBITDA margin, and probably yeah, and we continue to improve that as time progresses because I think the impact we will see in coming quarters. Once the raw material prices are lower, which we already have started getting the lower pricing into our system. So I think that will help in future also.
Right. And in the gross, again coming back to a strong number around 64%. As you said that still you facing some raw material price increase in January.
In certain cases, a lot of companies have also increased prices, because we have we have almost 200 vendors outside India. And a lot of, there's been a scarcity of materials and, in many cases the delivery times have gone up by at least 3 to 4 times. So that also created some pressure on the costing initially. But the major raw material like PVC, polypropylene, HDPE, and LDPE, all these have started coming down. So I think that will help us in the long run.
Got it. Yeah. I think, sir, you said the China dumping has started again with the different route, but yes, the regulation, as you mentioned about that, the regulation came for the medical devices.
On 1st October 22.
Right. So
a lot of companies have dumped products in the market before the regulatory regime started, actually.
Okay.
Yeah, so, the Chinese, how they have destroyed our industry, so they try to, at least in the renal field, not in any other business, but in the renal field earlier it was very low duty, and even the IGST on the product is only 5%. So and for us all inputs are 18% if we manufacture the product locally, and we have to there's an inverted duty structure, and on the finished products only 5%. So when the Chinese import the finished goods into India, they pay 5% IGST. Whereas we are paying 18% on the raw material.
Got it. So it would be like a more than 3 months implementation of this new regulation. So
yeah, and we have also requested the government, that for every Chinese product coming into the country, there should be a checking of quality, because there is no check of quality of any product which is coming into the country. They are just freely allowed to import. So we have also requested the government, to bring a quality control order, where they can start checking each lot for quality. See, today when we export our products, let's say to any country, we are exporting to 120 countries. Our products are subject to testing in those markets. They really test the products every lot sometimes. But in India, we don't test anything in the country, which is coming inside the country.
Right.
So we have made some representation of the government. At least, in certain, like if you remember, in steel industry, now there is a quality control order. So every steel which is coming into the country has to go through the BIS checklist. And when the BIS is certifying the product, then only it can be sold in the market. So similarly, we are asking the government, which has made standards of 1400 medical devices, that every product which is coming into the country should be regulated and tested before it is released into the market.
But is it possible, or when do you expect that it would be coming? Government reacting on that?
For example, till last year there was zero duty on dialysis products.
Right.
And now, and in the last previous budget, not in this budget, but in the previous budget, government put some duty on dialysis products. So they are taking some steps slowly, but it will happen. But it is, so we are not dependent on those things as a business. The business continues to grow. We are still showing a growth of 45% in our Elan business.
So,
But we wanted a growth of 60-70%. That's the wish list. We are not able to fulfill our wish. But but the point is, if those measures are in place, it'll help the local industry to grow faster. That is the point.
right.
Which is happening in every industry. You see toys industry, automobile, in mobile phones, everything it has happened.
Right.
Yeah.
And my next question is regarding your export. And the export, you said one third is from the Europe and the one third from the other ROW
Correct.
market. Can you just give the bifurcation between the white labels and your branded business on the export market?
So India is totally into branded. So there is no white label in India. This is 0. And in exports, we do now close to around 75% branded and 2% white label.
And most Europe would be majorly, it's like equal distributed because I think
Europe is more favored towards own branded.
Okay. So that means white label majorly are coming from the developing market, or
no? It is coming from pocket depending on the customer. We have customers in 120 countries. I can't put it on a call record right now.
Right.
Yeah. But it is scattered, very scattered.
And in the Europe, what would be the key growth driver for you? It's like a geographical expansion. Also, you said you are tied up with some local manufacturer as well, or the local distributor as well.
Currently, the geopolitical situation in Europe is very different. With the freight, with the energy costs increasing in Europe, so manufacturing is becoming more and more difficult in Europe. And I think most of the companies are moving away from, let's say, manufacturing which was done in, let's say, Russian-dominated areas or from China, basically. So there is a shift towards India, though it's not coming in that big way, but we are seeing that traction because we already have existing customers. So if my customer is buying 10 products from me and 50 products from China, so we think that another 5 or 7 can be added into Polymer's basket in next maybe 1 year or so, depending on what we can offer them. So we are seeing that huge change and shift coming towards our side.
Got it. So what would be the driver? It's like I understood that shifts are coming, but what would be the key driver for us in next 3 to 5 years in the Europe, basically?
See, one is our direct presence in the market. So we have a direct presence. We have a CEO. We have a sales force there, and we are adding more people in our sales team in Europe. So that's number one. Number two, I think when we look at product parity. See, today our products compete with the top brands in Europe. So for us, I think that is important because the customer have recognized that we can offer a very high quality product and at parity with existing brands. So that is helping us to gain market share in Europe. So these are
Yeah. So infusion therapy would be a biggest.
Mr. Mitesh, may we request you to join the question?
We'll come back on the queue.
Oh, thank you. But I can answer it, guys. Don't worry. Yeah.
Sure.
We take the next question from the line of Mr. Dhiresh from White Oak Capital. Please go ahead, sir.
Yeah, thank you. Himanshu, I think you mentioned something about US being delayed. Sorry, I didn't catch that properly.
Yeah.
So maybe if you can just repeat it again, that why US
Yeah, so I'll
delayed.
tell you. Yeah, sure, absolutely. So, in US, we had applied for US FDA last year, but when we got our, submissions done and when we got our first queries, they had asked us to completely test the product for genomic, which our products don't get into that because genomic testing is done for products which are for long duration in the body. Let's say when they are in the body for more than a month or 2 months or 3 months, especially the implants. Whereas our products remain inside the body between 5 to 7 days maximum. But because it's changed and this was not picked up by our consultants, US FDA consultants in US, this point. And we were also very surprised when they put up this point to us, that why are you requesting us for the test which is not mandated. But of course there is no way to argue with the regulator. So we had to get the whole retesting done, which took more than 5 months. And now we are resubmitting, there were only 2 testing to be done, but these takes long time because it's a genomic testing, a long duration impact of the product inside the body. So the reports have already come in. Already we have seen the draft reports. And these are done, the testings have been done in the US laboratories.
Okay. Has it been submitted now, the report?
Yeah, so we are in the process of submitting right now.
Okay. So you expect in the second half?
Yeah, so I think, and it takes 60 to 90 days because now these are only specific 2 queries which have to be answered.
Okay.
Rest all have been answered. So there's only those 2 specific queries on 2 testing. And then, hopefully in next 60 to 90 days, we should have a clearance.
Okay. And is there a milestone that you have in mind that in the first full year, how much do you expect to do from
So
US
I think
market?
I've given a guidance for 3 to 4 years. I think, and honestly, this is again like what I spoke about Europe few minutes ago. Same thing happening in US. Many companies, like large ones, want to diversify the supply base to China, to India. And I think once we have an FDA approval on products, and once the company sees the visibility, they see our listings on the FDA website. So I think we will see more traction. And with the existing customers also, where we have signed a contract with one customer, we have already got 8 to 9 projects we are working on right now. Hopefully, we are very hopeful that we'll get 2 or 3 additional more projects for them, other than what we have today. So already there's a momentum which is building up in favor of India. Hopefully it continues, and we will see. And what happened day before yesterday, the shooting of balloon. I think China is not a favorite anymore.
Certainly. So when you say 8 to 9 projects, Himanshu, you mean these are 8 to 9 products that?
Yeah, projects. So I mean projects mean these are products, because any product which is sold in the US has a different specification than what we sell today. Because US market is very different from rest of the world. Because they have their own.
How many products in US have you got tested for genomic testing? So you would know, right? How many doctors you are
correct,
submitting?
yes. So there are 2 product families in the infusion therapy. I'll not name the products because it's confidential.
Okay.
But and the 2 products which don't require genomic testing, which are class 1 devices, which are already listed. But these 2 will go parallel, because once they will start for everything.
Okay.
So that is what we are looking at right now. And so most of these products which we are getting genomic testing are class 2 products in the US FDA. And class 3 are the implants.
You will have a portfolio of class 1 and class 2 devices that you are filing for in US, is what you're saying?
Yes, that is correct. Absolutely.
Okay. So class 1 would not need genomic testing, so those have already been filed?
No, that will start. So that will start parallelly.
Will start, okay. And two class 2 devices needing class 2? 2 product families.
Yeah.
2 product families which are under class 2 genomic testing that you have already done and you are going to submit now.
Yeah, correct. Absolutely correct.
Okay. And on one thing on this renal, so you mentioned the market for machines is 4,000. What would be the dialyzer market in terms of numbers of?
Dialyzers, again, India is a big reuse market. But from the, because in some places we use single use, some places 4 times, 8 times, 10 times. Like if you go to Mumbai and, go to dialysis centers, most of them are using it 10 times. Whereas globally, pardon me, I've got a bad throat. So globally the norm is around, single use. So India, we see that the market is between, I would say 80 lakhs to 1 crore 20 lakhs dialyzer per year.
80 lakh to 1 crore.
Yeah,
and
1
how
crore.
Many are we selling per month?
That number we are not disclosing. I'm sorry, I cannot say that. It's confidential, and very we don't want information to go to competitors.
Okay.
Yeah.
And what is the duty structure? So you said that there was dumping and there was FTA from Thailand, Malaysia, and Japan.
Yeah, because when you have
FTA, or that is still.
No, the FTA is there. FTA was signed in 2009-10 for almost everything, which is coming from Malaysia, Thailand, and Japan, and some other ASEAN, South Korea. So anything produced there comes on zero duty in India.
So that barrier will always be there, right?
So that barrier will be there, but the government has said that we can't change the FTAs now. But and which is really strange that they have FTAs for imports into India, but they don't have FTAs for exports into those countries.
Okay.
It's very strange, because India continues to sign FTAs, but I don't understand what advantage Indian companies are getting because of those FTAs.
Okay, so this FTA expires which year? Until then you have to.
I don't know about these FTAs when they are going to expire. But anyway, this doesn't impact the business. But what I'm trying to say is the growth is kind of muted, because the plan initially was this year to grow at 60-70%. We may grow only at 45%. But that is the business.
Okay.
Yeah, it's not that it's going to impact or hurt anything, which is nothing in the whole scheme of things.
So our larger revenue right now are we getting from machines or are we getting from dialyzer?
No, larger revenue comes from dialyzers.
Dialyzer, okay. ठीक है Manch, I'll get in the queue.
Yeah, but this is not too much of a revenue, so there's nothing, we still continue that growth number of 22-23%. Overall.
Okay.
Yeah.
Okay. Thank you.
Yeah.
Thank you. We take the next question from the line of C.A. Garvit Goyal from Invest Research. Please go ahead, sir.
Hello. Good evening, sir. Am I audible?
Yeah, please go ahead. You're audible, sir.
Sir, can you spend just 2 minutes of time for giving the overview on the overall growth drivers? Like you were mentioning, the company will grow at a rate of 20% going forward as well. So, what can be the growth drivers for next 2 to 3 years, and what are the downside risks do you see for these growth drivers, sir?
See, there is always a risk in every business. So I think being in a medical device business now for 25 years and company almost touching a revenue of 1,000 crores, I think we don't see too much of a risk because today we are present in 120 countries. So we have a great geographical spread. Plus, in terms of business, 1/3 is in India, 2/3 is outside India. So it's a great mix. So if there is a currency risk, we don't have a currency risk because we are export-driven company. So, overall we are able to balance that very well. So if you look at the growth possibilities, today the growth possibilities are in India. Because India is still only penetrated, I would say, we have just penetrated India 3 to 4%. So India, easily we can go up to 10% to 12% in terms of market share in next, 3 to 4 years. So, and plus Indian market is growing maybe at the rate of around 10 to 12%. If we see the healthcare industry growing in that, and maybe once we see more investments in the private sector, the industry may go between 12 to 15% also. So I think that is one big traction for us in India. Europe continues to grow. I've just spoken about Europe. The changes which are happening in Europe in last 1 year and the kind of response we are getting, and major part of our export revenue is in Europe. And then next growth drivers will be US. Once we get our FDA approvals, I think US will be a major growth driver. So these 3 geographies will be the core markets for us going forward in next 3 to 4 years. And they will drive our growth. Notwithstanding that, other businesses in other countries, when we look at South America or Middle East, South Asia, they'll continue to grow. But I think the focus will be more on these 3 geographies.
Okay. And sir, you are already selling to US, right?
Yeah, we have a revenue of over $1 million in the US. But once we get our FDA approvals for Class 2 devices, I think we will see a kick in revenue and we'll add more products there.
And by when do you expect this FDA approval?
I just mentioned on the previous, I think we are expecting in most probably in 60 to 90 days from filing. We should be done in next 1 or 2 weeks. And hopefully in Q2, we should start getting additional revenues from the US.
That's true. And so you were mentioning some demand traction from Europe. Can you put some light on the size of opportunity, and will this traction be a permanent one?
Yeah, the traction is permanent because, we have been slowly building. So the Europe share in our exports, let's say around 5 years was only 10 to 15%. But today it is around 40%. So over 5 years, once we appointed a CEO way back in September, October 2017, we have seen the good traction building up. We put a sales force and we have an office there. So this has really helped us to grow and make our presence felt in the European market. And continuously we are seeing a traction, in Europe. We are adding more products with the same customers. Like if a customer is buying 3-4 products, we are adding more products in the same basket, as we have a large range of products which we can offer. So our product basket, our pipeline of new products which we are launching, that is helping us. Plus we are able to take, because we are ramping up the capacity, we have put in additional investment of 300 crores in infrastructure. That will help us with the new manufacturing capacity which we have built up. So all that will help us to, take more market share in Europe.
No, I was talking from the side of that energy crisis thing.
So crisis is not like, crisis is not permanent. Number one, we don't know that when it's going to stop. But overall, we have seen that shift, and I think that China shift is a major one, which is happening all across. And that is nothing to do with the crisis with Russia. The China shift is something which every company is looking at, moving some production out of China and moving to market to de-risk the business. I think India should, it's not only polymer, I think overall India should get benefit of that across different product categories.
Understood, sir. And what is your view on the EBITDA margins going forward, sir?
I think we will see an improvement of 100 to 200 pips as raw material prices have softened and as currencies have also stabilized to a certain extent. So I think we would see an improvement in the margin in coming quarters.
Okay, that's all from my side, sir. Thank you very much, and all the best.
Thank you very much.
Thank you, sir. Before we move to the next question, a reminder to all the participants, anyone who wishes to ask a question may press star and one on the touchtone phone. We take our next question from the line of Saptarishi Chatterjee from Centrum PMS. Please go ahead, sir.
Thank you, sir. Thank you for the opportunity. My question is, as you were talking, India should be gaining market share because of China Plus One strategy.
Yeah.
Can you please quantify, like in Europe, in US, what would be the market share for India, and within that, what would be the approximate market share for Medicure?
So I think Europe and it's very difficult to quantify because Europe and America are two largest economies in terms of the percentage of medical device. So America is probably 25 to 28% of the global medical device consumption, and Europe maybe around 10 to 15%. So they are very large geographies. Now, as we move up, the value chain, and as we start adding more products in the pipeline in both the geographies, I think the opportunity is huge because when we start comparing with large peers in our industry, Becton Dickinson, B. Braun, Becton Dickinson is today a $20 billion company in revenue. B. Braun is around 8 billion or 9 billion revenue. And there are a lot of mid-sized companies, which are 3-4 billion. So there is a huge traction available, for Polymed to get into different segments and, follow these market leaders. And in my view, opportunity is infinite. The number is only in the mind. I think for Indian companies, I think if we continue to make good quality products, I would say, and continue to invest in new technology, I think in every sector, not only medical devices, even any engineering product, I think there's a huge opportunity for us.
Understood, sir. Very helpful. And sir, if you can talk about in terms of in the infusion therapy, which is our core
Yes.
product,
Yes.
there who would be our major competitors on the customers that we serve, and what would be the pricing differential between us and our competitors?
That's a good question. So, the biggest ones are B. Braun and BD again, which are present in Europe and US, and also to a larger extent in India, because they are very deep down in those markets. And if you look at the pricing differential, could be between 15 to 20%, depending on the market to market. Now, US is a very high price market. If one product which is sold by BD at, let's say, around $1 in Europe, the same product is sold at $3 in the US. So the markets are very different. Japan will be $3, Africa will be 25 cents, for example. The same company has different pricing for different markets, depending on the user capability to buy the product. So in my view, I think for us, major competition and major revenue, let's say, drivers will be Europe and US, because there we get a better pricing when we compare ourselves with the largest competition in the market. And also there is appreciation for quality. In these markets, they're not buying the product because it's low price. They're buying, so 70% weightage is given to quality and to performance of the product, and 30% is to price. So if you fail the first two criteria, price is never a criteria for them. Only when you qualify for the first two quadrants, then they bother for the third one.
Thank you, sir. Thank you for this detailed answer. And just on the customer part, if you can talk about in terms of our, let's say, customer concentration, top 5 customers would be contributing to how much percentage of revenue?
I don't have a number offhand, but I think top 5 customers will contribute around maybe between 20 to 25% of the revenue.
Great, sir. And just last question, any CapEx guidance for next year?
For next year, the CapEx will reduce now because most of these plants will be operational, the 3 major plants. So there will be a taper down in CapEx. So between the 2 financials, FY23, we have done a CapEx of close to 300 crores. So I think for the next year, I think the CapEx will taper down to around maybe, I don't have the right number today, but I think it should be between 75 crores to 100 crores.
Thank you so much and very helpful. All the best.
Thank you. We take the next question from the line of Sumit Gupta from Motilal Oswal. Please go ahead, sir.
Hey, hi. Good evening.
Hi, Sumit. Yeah.
Hi, sir. So just wanted to understand on the overall segmental mix. So by the next 2 years, so how much consumables contribution do you see in the overall mix? Like currently, I presume it is more than 95%, right?
Correct.
So between consumables and equipment,
it's 99% or 98%.
98%, right? So in the next 2 years, dialyzer and dialysis machines are also.
No, dialyzer is still a consumable. Dialysis is only a machine. So dialysis machine, even if we sell 200 machines, will be 5 lakh machines. So it is not more than, let's say, 10 crores the next year. And the following year, it may be around 15 to 18 crores. So that's not very big number in terms of the whole scheme of things.
Okay. So consumables still be
will be the major business. Right.
Oh, okay, sir. And sir, second question is regarding the EBITDA contribution. So can you give us guidelines of how much each segment contributes, major segment?
We don't have a segment wise breakup, so I can't give you that, and we don't share that also. So yeah, but of course when we look at domestic versus export, that guidance I can give you. So domestic. So export EBITDA is almost around 30% plus, and domestic is around 18 to 20%.
Okay. And do you see it changing?
I don't think. No.
Domestic EBITDA increasing?
It may increase, as the revenue numbers increase, but again, we are adding more people. We still want to increase our network, as we go forward, as we have only 3 to 4% penetration. So we'll have to add more people. We have to go deeper into the network. So even if we maintain that, I'm happy with that number. I think overall we will see improvement over a period of time in the next 1 to 2 years for sure. Because as the revenue increases, margins will definitely increase. And even this year we have a 20% more than 20% increase in revenue. Next year guidance is also 20% plus. So once we see that top line number increasing, I think the margins at the bottom will definitely increase by 100 200 pips every year.
Okay. And so within exports, so how Europe versus US if we compare, so in next 2 years, so Europe would still be around, how much margin is there for Europe, and how much
we don't have a specific country wise margin, so I can't share that number with you.
Okay, sir. Thank you.
Thank you. We take the next question from the line of Mr. Mahesh Uti, IAMC. Please go ahead, sir.
Yeah, thank you, sir, for the opportunity.
Hi, Mahesh. Yeah.
Hi, sir. Hi. Sir, would like to know your commentary on the volume growth as far as the prices are concerned. I mean, you would be with the strong commitment you have on quality, so prices won't be a concern for me. But what will be a commentary on your volume growth?
See, I think volume, when you see an increase of around 21.15%, let's say revenue growth in 9 months, so volume has also grown by around 20%.
Okay, sir. Okay.
Yeah, so it's almost a correlation there, because if you see euro and pound sterling have been very steady over last 1 year, because there was small drop, but they have come back to original level which they were 1 year ago. Though dollar is rupee has depreciated against dollar a little bit, but I think overall when we see that number, and we also have India revenue, almost 1/3 of revenue is in India. So overall when we see that, I think almost 20% is volume growth.
Okay, and you feel this could be sustained and even higher can be achieved?
Yeah, absolutely.
Okay, and sir, one thing I would like to know from you is any commentary on dual chamber bag which one of the companies has come out with recently. So how are you?
Again, could you repeat that? Sorry, sir, I couldn't get you, Mahesh, your point.
One of the medical device called dual chamber bags. I mean, are you also looking to enter into that area?
No. So we only do blood bags. So the blood bags don't have dual chamber. So blood bags are a different product. Dual chamber may be for IV applications, mainly for IV bags. So Polypod is not into IV bag manufacturing.
Okay, sir. Yeah, thanks.
Yeah.
Thank you, sir.
Thank you.
Thank you. We take the next follow-up question from Mr. Mitesh Shah from Nirmal Bang Securities. Please go ahead, sir.
Thanks for taking my questions again. So
no problem. Go ahead.
Yeah. So my question is regarding your export business in China. I believe that China is more on the outsourcing and the supporting to the larger players. So would you be expecting that opportunity will be increasing because of the China issues, China plus one opportunity?
Yeah. I think that's what I said initially, that today when we talk to purchasing groups or to purchasing manager of large companies, most of the companies are talking openly about moving their supply chain from China. And of course, the first bus has gone to Vietnam. That is very clear. All low technology production has moved to Vietnam. And there is no doubt, India could not grab the opportunity. Unfortunately, we did not have favorable policies as a country. But after, introduction of PLI schemes and certain, favorable tax regimes from the government, I think there is a traction to, building towards India. And I'm not talking about medical devices, across all sectors, I think. So I think, so there will be I think a lot of, new business coming to India because of China, and especially for companies which are already present in those markets in Europe, USA, so they will benefit more than the new entrants.
So actually my question is more about we always have a focus on the branded business than the outsourcing one to the larger players, and the China opportunity is coming through the outsourcing to the larger players like B Blunt and...
So you're right. I think, sorry I missed this point. Yes, Polymed is more into branded business, but I think, in US also and Europe also, we have seen that due to change in regulatory regime, a lot of companies are moving from their own branded products to products which are made by companies under the brands. Due to change in regulatory, practices, especially in Europe. There's a big change in Europe right now. So for us, that's a big advantage that our own brand is today going in markets, UK markets, Germany or Spain or Italy or in France. So that is the biggest advantage for us going forward. US is more, yes, towards white label, but it will still have a product manufactured by Polymed because of the new FDA requirement. So, but we'll have to balance it, somehow we have to balance it.
Got it.
Yeah, it's always a balancing factor, like what you want at the end.
And regarding your dialysis machine, so we are manufacturing entire dialysis, or did we just take a plant from import or the domestic market and we assemble that?
No. So dialysis machine has a 50% local content.
Okay. And definitely we just have recently started, so...
Yeah, it is just the initial phase, and, it will take time to build up the confidence of the users, and Fresenius has almost 90-80% market share in the business. So it will take some time, we can't get the share on day one. So slowly we're building it up. I think that's what I've also mentioned earlier.
So how much we are burning cash over that business, and when...
No, we are not burning cash. We are not burning cash. Polymed never burns cash. We are a positive cash generating company.
Oh.
So we will never burn cash in any business. So we are always very careful that, we only will get into businesses where the gross margin is good enough for a company to sustain and grow the business and, have innovation in that area. So we never pick up like gloves or syringes or common products where the margins are very, very low and very commodity price driven. So we always work on products where we have, incremental innovation, we have R&D factor. So that keeps us, with good profit, healthy profit margins and good cash flows.
Absolutely, but dialysis machine we recently started and we just put this...
Every business, has a 3-4 year gestation period. So I think that we all have to understand. So,
right.
Yeah, you can't get the best numbers out in the first 2-3 years. The best numbers will come only in next, let's say, the 3rd, 4th year, that's how it will go.
Right. I think US, I think it's number of almost 2-3 years delayed, and now the genomic testing we are doing. So how confident we are that now?
No, we are very confident. We have spent a lot of money for testing, so we are very confident. We already have contracts in place, so we are very confident. Just waiting for the final testing to happen.
And how many employees we have over there in the US?
So US we have 2 people, but it is mainly we are really working with large distributors, and they will be managing the relationship, because the CRM will be maintained by the employees there. All supply chain distribution will be done by the companies themselves.
Got it.
And we'll add more people as we grow. It's the initial phase of the US. As we will, as we have more business coming from the US, we'll start adding more people.
And we are adding around 300 crore as in capex, and the new plant will be starting next year. So what is the capacity currently, and how much it will be increase our capacity by next year?
So basically the turnaround is around 1.5 times to 2 times. I think that is what we are targeting right now. So we should be able to add around 500 crores of revenue from that 300 crore expansion we are doing.
Got it.
Yeah.
I think need one-on-one from you when you.
No, sure, most welcome. You can always drop an email, and whenever you're coming to Delhi, please come and also visit the plant. I think you'll get more perspective about the company when you see the manufacturing facility. We're a hardcore manufacturing company. So you will see how how the product cycle is from basic concept to development to manufacturing to finished product, and how we do clinical testing, how we put the product in the market by doing clinical research also. So it's a full cycle basically.
Okay.
And it's not an easy business because you can see today there is not a single listed company in this space in 25 years.
Right.
Yeah.
Thanks for your answer. That's it from my end.
Thank you. Thank you.
Thank you. We take the next question from the line of Pankaj Shah from Dinero Wealth. Please go ahead, sir.
Yeah. Hi, sir. Good evening.
Hi, Pankaj. Yeah.
Yeah. So you just said that on domestic side, we currently are at 3-4% of the market, and we plan to reach say 10-12% over the years.
Yeah.
So what is the plan here? How are we planning to do this? Is it purely through distribution, or are we planning to get into newer areas?
See, I think the domestic market is divided into two parts. One is in tier 3, tier 4 cities, which is driven by the distribution network, because we don't have field force very deep in those tier 3 and tier 4 cities. So in tier 1 and tier 2, we go directly, where we have already 300 people. Well, we go directly into hospitals, and our team would get the product approved, and then they will go in the hospitals, and the supply chain is managed by the distributors. So we are adding more people in tier 1 and tier 2, and I think on the corporate side, we are seeing that more traction being created because of the new, like today, most of these, corporate hospitals are dominated by large multinational companies. So that change is already we are seeing in last 2-3 years after COVID, where supply chain disruption happened, and we are seeing more alignment with the large corporates like Apollos and Maxes and Fortes or Manipals or Aster DM. Now you can see Polymed products in all large major hospitals, whether it's Breach Candy or whether it is Hinduja or whether it is Leelavati. You see now in every hospital. So now it is now, and we have a basket of 150 products. So if you have 3-4 products, we have entered the hospital, we have opened the doors. So now it's time to add more products in the same basket with the hospital. So that is the work we have to do. And if we are able to, and probably we'll be adding another 200 to 300 people in the next 2-3 years in field force, because it's a business which needs a lot of physical interaction with the clinicians, with doctors, with nurses. So we will build that up. So, and that's the room we see available. So top 500 in the hospitals in the country, they can actually give us a good sizable revenue. Let's say each hospital can give us 20 to 30 lakhs of revenue every month. So that is what we need to work on.
And sir, if I can understand how this number of hospitals have grown over the years, what has the count been and what are we there currently?
Very difficult, tough question, from your side. I think I can give you a very generalistic idea. So in India, there are around 17 lakh hospital beds, to my knowledge. 7 lakh are in the government sector at central and state level and autonomous institutions, and around 10 lakhs are in the private sector.
Right.
And totally there are around 15 to 20,000 hospitals, which are over 50 beds. Total number of hospitals maybe 50,000, but there are 5-bedded hospitals, 10-bedded hospitals in remote areas. But if you say sizable 50-bedded hospital, it will be around 15 to 20,000.
Okay, so our target would be that 15 to 20,000.
I would say we will target the top 5,000 first.
Okay.
But in terms of direct approach. And through distribution network, maybe that's through the distribution channel.
Yes. So in one of our old presentation, where we talk about our reach, so there it's mentioned that you have 275 plus sales executive and 6,500 plus hospitals reach. Yeah. So how should we read this?
Yeah, so you're right. So we have 300 people on the ground. That is correct. Okay. Absolutely correct. As I said earlier, a few seconds ago. And yes, we are reaching to 5,000 hospitals, which are their top 5,000 hospitals. And the balance are reached through our distribution partners. So every person who is in the company, let's say these 300 people, their task is to reach to around 15 hospitals, 15 to 20 hospitals. And the balance is taken care of by the distribution network. Because we would know also at the end where the final product is being used.
Right, exactly.
We will always keep a track to distribution partners also.
Got it. And you are saying there's 300 executives. You are planning to add another 200.
Yeah. We will have to add, because if we have to grow and go deeper, we'll have to add more people. There is no choice.
Great. And sir, last question on the margin side. I think you were earlier saying that our target is to reach probably 30% margins.
Yeah, that's a wish list. And I hope, of course,
right now everything falling in place. Raw material prices also, freight cost also.
Yeah, so I think future quarters we will see that. Of course, that is our vision to be there in that range. We have seen 27% also during the COVID time, and the cost went down because of many costs were not there, as everybody is working remote. But of course, I think we are maintaining a steady margin of 23-24% EBITDA. But I think we will see some improvements, I think, in coming quarters. I think that will set up the trend. And as we access more markets, in Europe, US, I think the margin play will certainly improve. So hopefully we should reach there. But keeping our fingers crossed, let's see what happens in 2 to 3 years.
Great. Thank you. All the best.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to the management for closing comments. Thank you, and over to you, sir.
Thank you very much, everyone, for logging in, and I think thank you for very detailed questions, and kindly keep on asking us these good detailed questions. That will also give us more motivation to do better. So thanks once again, and from our side, we'll keep on the growth path, the growth track, which we have already mentioned to you, that with the guidance of 20% this year and 20+% next year, and with everything in place in terms of infrastructure, new approvals, I think there is no reason that we should not be able to do that. So thanks once again, and looking forward to talk to you in near future.
Thank you very much. Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.